We're a financial services provider. What we offer is a platform for our clients to access liquidity. And that liquidity is both through offering clearing on listed exchanges, on derivative exchanges, and also as an execution provider. So almost whichever market you want to be able to access, we should be able to provide you with that service.
How important is the futures business to the overall global offering?
The business is particularly important. When I started at Marex Clearing, there was about 12 people, and I think we were loss-making. Today, within Marex, the clearing and the futures business is 50% of the profits. We're almost 300 people in the organization, and I think we define ourselves pretty much as a clearing firm first and foremost. And all of the other services within Marex sort of hang off and are connected to the central piece, which is clearing.
Why have you acquired so many companies?
We have been consistent acquirers of capability. We don't buy companies just because they represent an additional source of revenue or they represent growth. We buy companies because they're bringing a client base that we are unable to access immediately or in the short term, or they bring capabilities which we can't access. So, for example, buying in the Middle East is, it gives us licenses and capability in the Middle East. So we're not looking just for acquisitions for the sake of growth. We're looking for acquisitions for the sake of the capabilities, and it means that we're very focused on what they offer. We're very focused on integrating in a way which ensures that we actually are able to manage the company in a consistent way with the rest of the business. We don't want to have duplicate systems, and I think that a lot of the time that's been the problem, that the integration has not been comprehensive, and so the companies end up being managed in a slightly sort of autonomous way. And without the same risk controls, without the same governance, without the same supervision. So that's been the key for us, is that whatever we buy, we have to integrate. We have to integrate into the existing systems, and we're not looking to expand the core services. We're just looking to fit clients and products into our existing services.
We're big students of history as well, so we're trying to have the lessons learned from the past. And risk management is absolutely core to what we do every day.
What is the growth strategy for North America?
We're still a little underweight in North America compared to the other markets. As you know, Marex started in Europe. We particularly want to grow into energy clearing. We feel like we are particularly underweight on that. So we're putting quite a lot of efforts around sort of that market and growing our market share. The other two initiatives that are particularly useful, or that we're tracking at the moment, are fixed income clearing. We're FICC members. We think there's a lot to do for a non-bank to be in that space, to offer that sort of a different product than the banks around repo clearing, along with the CME futures. We're very excited about the cross-margining potential that is going to come at the end of the year. And then lastly, the equity option is a big source of potential growth for us. Clearing OCC, we're clearing members. It is a slightly different market, different regulator than your typical futures, but we see a lot of potential in that. Power is a big market for us in Europe. We're one of the top members in ECC or EEX, as you might know. We've covered these markets pretty much globally. So we're members of Nodal, we clear Nodal, we clear ICE. We're even present in Australia and New Zealand around the power market. So we feel like we have a particular expertise in the market, and that extends all the way to risk management, because that's key. But the energy transition is a big topic for us. We really want to help our clients to manage their price exposure to electricity, and so this is where the world is going anyway. So.
How does the regulatory environment here and in Europe affect your clients?
Despite the noise around changes in regulation, the actual changes that have been implemented or are being discussed are quite small. The environment feels quite stable. The relationships with the regulators feel strong and stable. We feel that we understand, what they expect, and that we're able to sort of deliver that. So, within Marex, it feels as though there's there's a good operating environment with regulation. I think for our clients, that's also true. Many of them, operate in an unregulated environment themselves. They haven't really changed the types of services they need. So to me, it feels as though we're in a stable and strong position.
What are your plans for the next year?
There's a lot of space still for Marex to continue growing. The value proposition of Marex being a non-bank, being a source of diversification for our clients, sort of counterparty diversification. We think we can continue growing our market share and offering innovative solutions to our customers. We're going to continue diversifying in both regions. We're acquiring in the Middle East, we've grown in Asia, and also in terms of product coverage. We were sort of a few years ago, we were very commodities focused, and now we're multi-asset, covering rates, equities. So that's going to be the more of the same.
How have you been able to tap into the equity options clearing?
That's a big development opportunity for us. We're working on this. We're making a lot of sort of investment in systems and platforms. So we are investing quite a lot in technology to be able to support this, and in risk management as well, because that's a fairly different and distinct way of managing risk than your traditional commodity or traditional futures. But we're now self-clearing most of the larger clearing houses dealing in these products. We have acquired a business called Cowen, or TD Cowen, from TD Cowen, which is Prime Business, and that's giving us extended capabilities in the processing of equities and equity options. So we're feeling relatively optimistic on this sector.
What were the highlights of your financial results?
The most important achievement was that every one of our segments grew. And grew substantially. It wasn't a year where we benefited disproportionately from the impact of acquisitions. So most of this was organic. 85% of our growth in 24 was organic. There's some contribution from the TD Cowen acquisition that Thomas, the Prime Services acquisition that Thomas referenced. But the majority of our growth was from the existing businesses, and it was really just from adding clients and adding to our product capabilities. And as I say, it was in every one of our segments. So for me, the sort of highlight is that it wasn't concentrated on one area. It wasn't just clearing. It was across all of these services that we offer, and it goes to show that we are providing a service that our clients value, and we're able to move them in some cases from one service to multiple services.